what is the due diligence process that we follow when searching for a property within Ripehouse Advisory? Okay, so we have our core key algorithm. As we just discussed, there are 27 core metrics that go into that algorithm. It is a short-term model running over the top of a longer-term model, and since 2015, as we know, the results that has generated have been best in market by a long way. Very, very strong. Some of the data points are far more relevant than others. So the most relevant factor is 18 times more relevant than the 27th strongest factor, and as we just discussed, days on market doesn't even rank in the top 27 most important elements for predictive growth. There are many of those elements that are very strong, very expensive to maintain and capture as a business, and we don't release them publicly because if these allow us to enter into markets first. So we are very, very reactive of entry and exit points of a market, and we are consistently maintaining a list of every suburb in the country ranked in terms of that algorithm. So our internal processes are, we have 1 through to 15,000 such and such suburbs from best to worst from our algorithm, our Ripehouse score. We then go down that list, top to bottom, and are vetting, approving or disapproving each individual location. So that location might be impacted by overlays, floods, etc. Might have supply risk. There might be something about it that we know from a human perspective that rules it out. There are a number of those metrics. Obviously, it's already recorded and discussed in the Ripehouse Academy, even playing field system. We're going through and we are vetting, approving or not approving each location. It's only around 1 in every 10 of those suburbs actually makes it through that approval process. That becomes now approved. That suburb might go up and down the list. Okay, it might be right up the top where it's in the top 100th percentile of all locations, and then it might drop down the list and still is approved because it's not, doesn't, if an area is flood affected, it doesn't really change over time. So it still is an approved location. It's just the Ripehouse, the R score might drop down, so we're not really ever looking at properties there. And then we've now got a system that looks at each of these approved locations. Okay, I've just zoomed in on that a little bit there. It looks at each of these approved locations and it looks at every on-market opportunity in those locations, and then we are methodically walking through those and ruling them in or out. So there's 3,143 properties available on and off market in our approved locations. We've got how many days it's been on the market. We've got its first listing price. So this is obviously a tool that we use internally. We've got its first listing price here. Really interestingly, this property hit the market in the last 24 hours for $500,000, and within that first 24 hours, the price was reduced to $450,000. So we have all of this information for every property in the country. We know how many beds it is, the land, public housing percentage for the street, the Ripehouse score for that overall suburb. So we wouldn't probably recommend this property. The Ripehouse score is not really strong. We then can filter and order that. But we have the street level sweet spot score. Remember, every street in the country is rated from us, from good to bad. If it's in the Ripehouse sweet spot, our research has shown over 25.9% higher capital growth than the average for that suburb. So if the suburb went up 10% over the year, you'd expect that sweet spot to go up 12.5%. That's one of the keys to our overall strategy. And then we have a distress score associated with each property. This is likely to be in distress based on how long it's been on the market, the vendor descriptions, sales agent description, how much it's been discounted, and how that all corresponds to the suburb overall. So this is actually an internal search engine that we are using that helps us ordering. We would go through this list and we're looking for a lot of green. If we find green all the way across, we're picking that one up, picking that property up, and then completing due diligence on it. So we have the best in the industry internal search engine and software supporting our decisions. We are literally going through in a lot of detail, many hundreds of, it was 584 properties in the last 7 days alone from this list. So we're combing through this list. It's updated every day for us. At the moment there's over 3,000 properties there, but we're picking the eyes out of that list, and we processed over 500, almost 600 of these properties in the last week. So we pick out a property, we reserve it, we start doing our due diligence on it. We're then running a series of checks. We're talking to the real estate agent. Basic stuff like flood zones, slopage of the block, noise. Then we're looking at floor plans, usage of floor plans on building materials. Applying a very large checklist. There's actually almost 30 checkpoints that we're looking at for that property before it becomes approved. Once it becomes approved, we're then doing a formal market appraisal on that property. We're then completing a full push assessment sheet on it, and we're starting to have a discussion about what we might be able to purchase a property for. An overall expected 1 year recoup of capital percentage. So, 1 year return on investment percentage. If we put $100,000 in, our minimum projected expectation is $65,000 worth of uplift or equity sitting in that property at the end of the 12-month mark. In the last 12 months, we haven't completed the audit for 2022, but it was quite high in 2021. Over hundreds of acquisitions in 2021, our 1 year recoup of capital percentage was 150% average, right? So the property has to, at a really high level, be in an approved location. Then we are picking the eyes out of our internal search engines and software that we use that do a lot of the heavy lifting and ordering for us. And then we're going through and diving into that deep dive shortlist on about 600 dwellings every week. Of those 600 dwellings, the vast minority of them, only around 50 to 70 of those properties, actually pass through that due diligence process, and then we have a deal. 50 to 70 of them actually have the projected Ripehouse return on investment requirements. Then we might be we're showing those properties to clients, we're talking through them, and we might even miss out on the negotiation. It might have even sold in that conversation process, which is okay. So we're going right down this big pyramid to end up on only a few acquisitions every week. It is truly best in class, and we're continuing to improve the tools and the intelligence that we use to do that.